welcome to FountainFX on Wednesday the 11th of June 2014. Sorry we missed out yesterday's blog, just been busy with trading, looking at the markets and taking advantage of the moves. And if I just share with you what's actually been happening since last week, we can see on this 4-hour chart that last Thursday we had this big amount of whipping up and down. Price pushed down from the 136.24 all the way down to the 135 area, almost touching that, and then turned, whipped all the way back. We then had non-farm payrolls out on Friday, which saw this movement up here. But based on that, what's actually been happening since then is that because you suddenly have price move with such huge momentum all the way up, we can basically take a trade in the reverse. And because it didn't continue on up, it sort of consolidated and started to bounce off this area of resistance here from a previous area of resistance to the left. We started to see weakness coming back in. Price was in a downtrend at that point, so it was a continuation of the trend that there was, and so really it just gave us an opportunity to take a short off this high from when the non-farm payrolls came out on Friday. So taking a short at the 136.60 area and taking it all the way down to the bottom of this very large bullish candlestick here. We've been able to bank some profit and take out, close the trade around about the 135.45, and so therefore we've made a nice 115 points trade there. It's now a case of going back and taking a look at what the market is doing today. On the 4-hour we can see that the MACD is starting to show some upwards momentum. It hasn't crossed the zero line yet, but we need to be aware of that. So if we quickly switch down into the 1-hour chart, we can see on the 1-hour chart from today that this area of, at the bottom here, it's created an area of support. If we scroll right, let's just confirm where price has previously acted. We've got to go back for quite some time to find that. Where on earth are we? Come on. We're seriously going back here because we are going back into some significant areas. So we've got to go right the way back. There we go, we're finally coming back into it where price was at here. Now what we're really looking at is this previous low down here at the 134.80 mark. But as you can see, if we look at these two the tram lines here, we can see that it's cutting right through the middle of this previous price action. So in all honesty, that's going right the way back to February. The likelihood that the market is remembering or honouring that price point from right the way back in February is probably very slim. So let's just cut straight back to it. Basically, we're looking at price action as it stands here. Price has come down into this area of support and it's pushed up from it. Came back down with the euro open this morning, pushed down into it, literally touched and then rallied high. It's pushed high, it's pushed further away, it's now coming back down into it. So it's a good potential for a long entry. Purely because of previous price action, but also in the short term. Now, it could just bust and go straight through and push all the way down. However, because price has actually bounced off it and pushed higher and come all the way back up into previous resistance, it's starting to show some strength. So if you want to do a quick trade for very small amount of risk, I mean we're talking 5 points here in this area, then you could put on a buy order there with a stop just below this lower line and see if you can get back price to get back up into this area of resistance at the top here. So we'd be looking around about a 30 to 35 point gain from probably about a 10-point risk. So that's really something you can look at short term, but it is going against the trend at the moment. However, it's saying that, look, if we look at this, it looks like bullish momentum is starting to build. It is at the area where price previously came down into and then rallied heavily out. So we are looking at the 1 hour. If we go down into the 15-minute, this is just for further confirmation. If we look at price action, if we go all the way back on the 15 minutes to the previous movement here, price did close down a bit below, so it may be a case that what we actually want to do is use the bottom of this candlestick for our stop. which is the 135.15. There you go, you might as well say. So we could use this area as our zone, so we're buying at the 135.25, and we put a stop at the 135.15. And that's how we can measure it. If you really want to be a bit more lenient, shall I say, because price has actually rallied quite hard out of here. So actually ignore what I've just said. The reality is that price is down here. This is the low. So if we look at the low here at the 135.20, we look at a buy at the 135.25. 135.20 is the low. Allow for 3-4 pips. So yeah, 135.25. Sorry, 135.15 is a good area for a stop. And that would be a way in which you could plan out that trade. I understand that some people are having a struggle in terms of trading by intraday or swing trading. Don't worry too much about that. I would look at swing trading rather than intraday trading, and just look for different levels. For example, from a swing trade point of view, we'd be looking at this area here as an area of supply. Down here where we are at the moment is an area of demand, so we'll be looking to buy down here, we'll be looking to sell up there, and that's where you've got the inequality in price. Confirmation of that is the fact that price has today rallied up and pushed higher than previous resistance, so it has broken through that resistance. So should it come back down, which it's close to, it's near to, we can also see with this wick here we've got some buying pressure coming in. So that's a simple way of placing a trade. If we just show you how to do that, you go up to new order, you do pending order, you do a buy limit, which is true, and that's at the 1.3525, and then you press place on that, so that's now filled. You then go and modify that order, so we want to just put in a stop loss at the 1.3515, so it's 10 pips, and we modify that. So we've now got our buy order down here at the moment with the dotted line. If we go to the 1 hour, we can see the stop order below that. Okay, so we've got a buy order there, we've got a stop order below there, and that's our trade placed. So we'll see how that transacts, and it's just because it looks like at this level that's where price is starting to push up from. We may be wrong, but we've got a small risk in there, and that's really how to place a swing trade. Start practicing it, start getting used to it. It's not about getting it perfect, it's about getting used to placing the trades and placing the orders, and then you can start to look at higher probability trades where, for example, here we can see price ran along, fell, whips up and fell again. This was a high probability sell order, especially with the market open, and the fact that it was like it just couldn't get through. It was creating an element of, you could see there was a resistance there. It was very much like a brick wall, and prior to that price was in a downtrend. So very nice trade there. We are now at or near the lows in the market, so we should be buying at this point. Anyway, that's it from FountainFX. Happy trading. We will catch you tomorrow. Bye bye.